Hi and welcome to our very first video tutorial Forex for beginners. First of all, if you are already a trader, this video is not for you, but you are more than welcome to watch it. We specifically made this video for those who wants to learn Forex and those who wants to get themselves involved in the Forex trading. If you're one of them, welcome, and I hope you'll watch this video till the end. We will try and make it as short and easy videos as we can. We're going to minus the things that we feel that is unnecessary for a beginner who wants to start trading to even comprehend the complexity in Forex world. Mind you, this is from our perspectives as traders, and some of you current traders may have different take on in Forex trading altogether. I mean, there's too much to fathom in Forex world as it is, let alone finding the best method to learn it is another mammoth task. Anyway, this is how we comprehend it, and I wish somebody had taught us this way. That would have saved us hundreds of hours. And by the way, before we begin, we must warn you that Forex trading is not all that hunky-dory after all. This is one risky business. But then again, what is there that doesn't come with risk? Life is full of risks. But how risky is Forex trading? Let me give you the number. Around the world, there are over 9 million people already trading online, but that's 90% of those traders lose money, and 80% of all day traders quit within the first 2 years. So in Forex trading, you can turn this into part of your income, but it can also ruin you by losing your hard-earned cash easily if you don't have a system. I just want to put it out there so that you guys know that it's not always sunny out here. The weather can be horrible sometimes as well. Okay? Now, let's start with the tutorial. In this video, we're going to teach you just the most important things to get you started in Forex so that you can start trading Forex yourself. And once you already know how to trade, then you can learn more in depth on how to becoming a successful trader. All right? Well, without further ado, let's get started. In this video, I'm going to talk about 6 topics. And the first topic is what is Forex? The second topic is who trades Forex? The next one, when can you trade Forex? Fourth one, what do you trade in Forex? And the last one is how do you trade and make money in Forex? Let's begin with topic number 1, that is what is Forex? Forex stands for foreign exchange, or FX. It's a global market that allows one to trade two currencies against each other. For example, there's BND versus MYR, that's a Brunei dollar against the Malaysian ringgit. There's IDR versus USD, that's Indonesian rupiahs versus the US dollar. And there's Euro versus the US dollar, and so many more. All right. Now, things that you need to know is who controls the price. The price goes up, the price can also come down. Who controls them? It's definitely not us. We're just a small player. It's somebody else. In Forex market, you need to understand who you are playing against. It's us versus them, and they keep taking our money. Some traders, they still don't know who they are playing against. Us as retail traders, we need to prepare ourselves. The number one Forex strategy in the world is to know who your enemy is. And let me introduce you to one of them. Well, amongst all of them, this is the biggest one. The biggest player that we are playing against is the big banks. Now, in the big bank, there's something called interbank, and it is, as a whole, is responsible for making the price go up and the price to come down. But there are about 5 to 6 world banks out there that controls over 50% of interbank. These are the main players. But there's also other big world banks out there, but definitely these are the big players. You've got the Deutsche Bank, Citibank, JP Morgan Chase, HSBC, Barclays, Goldman Sachs, and Bank of America, and there's so many more. All right, and you need to know them. In future videos, we're gonna delve more into this, but in the meantime, it's suffice for you to know who the big banks or the biggest players are in Forex, and just bear that in mind. Okay, now let's move on to our topic number two. Number two, who trades Forex? Relatively, Forex trading is somewhat new to retail traders. Not until the late 1990s, only the big boys could play this game. And for every of these big boys, they have to have a minimum of 10 to 50 millions to even start trading. That's a big sum. And it was actually intended for bankers and for the large institutions such as governments, central banks, investment managers who buy and sell currencies to trade foreign securities, and so many more. But because of the rise in the internet, online forex brokers are now able to offer trading accounts to retail traders like you and me. With as little as $100 or £100, you can open up a trading account with the online broker, and you can start trading right away. That's how easy it is. Okay. Now, who are the players in Forex? I'll start from the top player, and I'm gonna break it down into four groups. There is the big banks, as you all know already, as I mentioned before. The next one is the large commercial companies. Uh, for example, Apple, for example, yeah? It must first exchange its US dollar, for example, to the Japanese yen whenever they want to purchase electronic parts from the Japan to make their products. And you know, there are so many other big companies out there as well. For example, Samsung, there's so many, I can't think of one right now, and they all contribute to the market as well. All right. Next, the next player is government and central banks. Just like companies, government and central banks such as Bank of England, European Central Bank, and the Federal Reserve, they're regularly involved in the forex market too. The governments participate for their operations, international trade payment, and handling the foreign exchange reserves. Meanwhile, central banks affect the forex market when they adjust the interest rate to control the inflation. When it does happen on a monthly basis, it can produce some significant movement in the market. And now here comes the last group, that is us. They call us as retail traders. Even though we are at the bottom of the ladder or the list, but the numbers of retail traders increases on a yearly basis. The ideal of being your own boss, work whenever you feel like, no one tells you what to do or not to do, is just too good to pass on. All right, that covers for this topic. Next topic we're going to talk about is when can you trade Forex? It opens 24 hours a day, 5 days a week, Monday to Friday. It closes during the weekend. And in the UK, for example, it opens on a Sunday, 10 p.m., and it closes at 10 p.m. on Friday. Now, even though it opens 24 hours a day, it doesn't mean that it is always active for the whole entire day. And in forex trading, you need the market to move. It is very difficult to make money when the market doesn't move at all. That's why you need to know when there's liquidity in the market. What does liquidity means? It basically means that there are more people participating in the market. You need a high volume of market participants in order for the market to go up and down. And in Forex, the activity is broken up into four major sessions. One of the session is the Sydney session. Next is the Tokyo session. The third is the London session. And last but not least is the New York session. Liquidity is at the optimum level is around 10 a.m. and 3 p.m. London time, which is equivalent to 10 a.m. New York time. All right, well, that covers the trading time. But wait, knowing when to trade is equally important to know when not to trade. Some traders avoid trading when there's a high volatility in the market, And I know some traders do trade them and take advantage in this type of market condition, but be warned, it's not for the faint-hearted. As much as you can make quick bucks in a very short period of time, but you can also lose your hard-earned cash very fast as well. The time you should avoid trading is in the event of news. Best thing to do before you open any position in trading is to check the economic calendar. We traders have the advantage of knowing before volatility comes into the market. You can either go to Forex Factory or my FX book website and click on the economic calendar. There are other websites as well that shows the calendar, but personally, these are the two we normally use. In the calendar, keep an eye out especially on the high impact news, which shows in the form of red folder or just shows high in the red box. The main news we traders always pay attention to are ISM, which is the ISM non-factoring data. This one happens every first week of the month. Next is the non-farm payroll, or in short we call it as NFP. Then, that also comes once in a first week of the month. Next one is unemployment claim, also every first week of the month. Next is the interest rate announcement, which comes every month, mainly from the Federal Reserve, European Central Bank, and the Bank of England. Next is the trade balance, which comes once in a month as well. Next is the CPI, or the inflation, comes once in a month. And lastly, retail sales, also on a monthly basis. Okay, next thing we need to avoid trading is before speeches by several of the main players, i.e. the European Central Banks or the ECB. The current president is Christine Lagarde. Next one is the Federal Reserve Board, or the Fed chairman. Currently is the president Jerome Powell. Next is the Bank of England, also known as BOE, and the current president, who is nearly elected, is Andrew Bailey. Next is the Bank of Japan, BOJ in short, and the current president is Mr. Haruhiko Kuroda. I hope I pronounced that right. Now, the next thing that you also need to avoid trading is global events, such as, for example, the big countries' election, countries such as the United States, when they announce that they're going to be doing a United presidency's election. And I believe that is coming very soon as well. I think it's November 2020. Yeah, November 2020. And also for the Prime Minister's election in United Kingdom, and also the Chancellor of Germany's election. That does make a big volatility in the market as well. All right, the next one you need to avoid is wars. Of course, doesn't take a genius. Expect the market to become so volatile, it's best not to trade at all. Just stay away from it. It could be an economic war or a trade war, or the real war against two countries. It doesn't really matter which one it is, as long as it's a war, which is quite significant to the economic data. And if it does happen, or when it does happen, stay away. All right, I think that concludes our topic number 3. Let's move on to topic number 4. Next, what we are going to talk about is, what do you trade in Forex? And if you had been watching the tutorial from the very beginning, you should know this by now. The simple answer is money, currencies. There are so many currencies around the world, such as the Brunei dollar, Malaysian ringgit, Singapore dollar, Great British pound, the US dollar, and there's so many more. But in this tutorial, we're just going to concentrate on the 8 major currencies. That is the US dollar, the euro, Japanese yen, Great British pound, the Aussie dollar, the Kiwi dollar, Canadian dollar, and the Swiss franc. Okay? As you are already aware, in order for you to Forex trade, you need 2 currencies to go against each other. And in the world of Forex, they are called pairs. due to a plethora of pairs that we can make up in currencies, it is broken up into 3 categories. First one is the major pair. There are 4 major pairs that is most heavily traded currency pairs in the Forex market. There are the Euro USD, the USD versus the Japanese yen, Great British Pound versus the US dollar, and the USD versus the Swiss franc. Now, the second one is the minor slash cross pairs. These pairs refers to currency pairs that does not involve the US dollars, but mainly the euro, the Great British Pound, and the Japanese yen. For example, you have the euro versus the Great British Pound, the Swissy against the yen, or the Great British Pound versus the Canadian dollars. Okay? Now, and the third one and the last category of pairs is the exotic pairs. Now, in the exotic pairs, these particular pairs usually consist of a major currency alongside a thinly traded currency. For example, the USDTRY, that is the US dollar versus the Turkish lira, and the USMXY, that's US dollar versus the Mexican peso, and there's so many more. And also, out of all the currencies that we trade around the world, the US dollar is the most traded currency up to date. That's why if you tend to go and trade anything against the US dollar, you will see some volatilities in it, and there will be some movement. All right. Now, I think that we have covered the topic of what you can trade in Forex. All right, let's move on to the fifth and last one. Talking about our last and final topic. How do you trade and make money in Forex? Well, until you know the basic, I won't be able to show you the exact way of how to trade and start making money in Forex. Inshallah, that will be in our next video. As the saying goes, you have to learn to walk before you can even run, right? Now, the basic thing about Forex trading is either you buy or sell currencies. The objective is to exchange one currency for another in the expectation that the price will change. Let's take Euro USD, and that's the euro versus the US dollar, right? Let's see it in the chart. By the way, this chart is from a website called TradingView. It's where you can see charts for stocks, currency pairs in real time. This is very handy for traders, and the best thing about it is it's free. Anyway, let's get back to the chart. In this chart, I have circled out the current price, which is at 1.12206. Now, this is how you can make money in trade. Listen carefully. After doing your analysis and, of course, further investigation, you believe that the euro price will depreciate, which means lose in value, and hence you consider on going short. Now, in Forex, when you say you're going short, it basically means you're taking a sell. Likewise, if you are going long, it just means you are taking a buy. Okay? Anyway, so you've decided to go short and you open a sell position at the current price at 1.12206. Then after some time, let's say you go away and then you come back, then you realize the price has gone down to 1.12050, which I have circled there in the red. So your analysis was correct. The price has actually gone down from 1.12206, to 1.12050. This is how you can make money in Forex. I'm not going to show you and explain to you how exactly or how much exactly you'll be making based on this example, but let's just say your theory was correct and this is exactly how you make money. So remember, when we say we go short, is if you believe the price will depreciate, will come down. And if you go long, is if you believe the price will appreciate, to go up, gain in value. All right? But wait, a word of caution. If for whatever reason the price goes opposite, which happens to what you had predicted, because market goes up and down, right? Now your account will suffer a drawdown. What is a drawdown? Drawdown is a potential money that you may win and you also may lose. Okay? That basically it. That concludes our first video tutorial. We hope you're able to follow them. If not, go back, please go back and rewatch it again. At least you can understand them better. All right, I think that concludes it all. I'll see you in the next video. Assalamu alaikum.